Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of financial market updates. Listeners, Trump's whiplash on tariffs did provide some volatility in the market, but there are good divergent views also settling up. Few investment banks are calling for a major decline for dollar amid sell-off, while the likes of BOE governor are stating that the fears for dollar decline are overdone. In all these discussions, we have also seen central banks diversifying their reserves, with gold being a prime alternative. It also seems gold is outpacing S&P 500 in the performance. On the domestic front, we hear a statement from Scott Bessent on India being amongst the first countries to reach a trade deal, while it is also because of the lower tariffs, as mentioned in the statement. So, JK, what are your take on these volatile market updates?
Uh, Good morning, Shikhar. I think relatively last week we saw less volatility in the market. And, market in the absence of any major economic data, of course, we did have some, the routine data on weekly jobless claims, durable goods and housing data. But otherwise, we didn't have any market moving data. So in the absence of that, market was always looking forward to statements from officials on either side, from US, China, and also Europe. So all these basically did not add to any of the tensions that the market was harboring for quite some time now since the tariff talks began. And, mostly latching on to anything positive. As you said, the progress on talks with some of the countries being seen uh, provided some relief to the markets. Also, you can see that, from the reaction of the market to the Chinese reportedly weighing exemptions to some of the imported goods, the tariffs being removed. Yeah, I think that reaction leading to yuan strengthening and then stock markets rallying is clearly indicative of how the market is positioned. And we didn't have any fresh, negative statement about the Fed chairman or the monetary policy. So market is now like somewhat, is assessing its own position. And I feel market has had a very large sell-off in the dollar and dollar assets, which is getting some support because of the positioning and with some better atmosphere being built in. Uh, I think the recovery is very much underway. If you look at the yields on 30-year and 10-year, they have fallen quite a bit after threatening to break key levels. And in fact, the data says last week we had a very large inflow into the U.S. Treasury market. It could be a mix of both foreign and the domestic investors. So, so. If you look at the market, we are in a state of stability and perhaps positional adjustments and market also realizing whether they have sold more of dollars in a very short period of time. So that I think a recovery is underway definitely, particularly for euro. I mean, the evidence of this is very clear. The gold, which had moved substantially in this year alone, moving more than 30%, was retraced now by about 9 to 10%. So that very clear. The position is weighed against the dollar too much, and that is getting corrected, and that is likely to continue as we head into a key week of non-farm payroll data and also FOMC meeting next Wednesday. I think speaking of data, if you look at any data that we have seen so far, there has not been a major slide in the number, hard data. Of course, surveys like Michigan survey and consumer confidence, all these leading indicators also, all of these have been indicating a future decline in the growth, but as of now, no evidence from either retail sales, durable goods, or the job market as well. So I think market may become unsure of selling too many dollars in a very short period of time. So that's what making me think that dollar is on on a path to recovery to some extent, particularly against some major currencies like euro, GBP, and yen. And EM markets, of course, are on a different footing. They had been seeing a sell-off in their currencies for quite some time, ever since the Trump's election. And since then their recovery has been very modest. If you look at Chinese yuan, it's still trading at the weaker end. Of course, the trade talks between China and US will of course, make a big difference how it progresses. But overall, EM markets are less undervalued, and so that can lead to more recovery for the EM currencies, or they may remain steady while other currencies can take recovery path. On the reserve currencies status, which Bank of England mentioned, I think it's too early to talk of US losing the reserve currency status. Where is the alternative? We don't have that kind of liquid market to provide an alternative to the dollar right now. Even if it is going to be there, it's going to be a very long process, a very long drawn process, in fact. So dollar underlying, there's been definitely a big change in the sentiment, and the sentiment negative can play out more, but not in the immediate run. So that is what I'm looking at for the time being. As far as Indian rupee, really, one should appreciate the fact that despite the unfortunate incidents in the border state and India's initial diplomatic reaction and more direct action, what experts are looking forward to, despite that, the rupee has held its own within a range between 85 and 85, 65. Of course, a bit of central bank hand is also seen in this regard. But you can't also overlook the fact that investors have been also putting in money, fresh money into the Indian stocks for almost the last 10 days. So if you look at the data from NSE, last 10 days we have had positive inflow into the stock market, and so we are now in April. The flow is almost squared up or zero, considering that initially we had very large outflow. So looks like even the investors are not too much worried about the border situation, at least as of now. Possibly think that a quick resolution is possible one way or the other, or they would like to be in the Indian stocks and Indian assets which are being shunned for quite some time by the foreign investors. So their positioning, so that actually supports the rupee. But yes, if we do see any see major negative news, we can move towards 86, or even if we see dollar index recovering sharply, then also we may see 86. Otherwise, a stable range for the rupee is also look forward to this week, and along with the overall dollar also not weakening much more. Indian stock market also doing well on its recovery. I think we already had 1 or 2 days of fall after the incident. So looking at a stable market, I think looking for more headlines on tariff resolutions, and then the key data on non-farm payroll and FOMC, which gains importance in the light of the comments from the president about the monetary policy. Unlikely that Powell will say anything to it, but definitely the language will have some tilt towards how the fresh thought on impact of tariff on the economy, how they will approach. Of course, this is still 1 week away, but this is what is on the radar of the traders and investors right now. Thank you.
Okay, JK, that was good. And yes, folks, we have a few of the economic updates coming in, and although in the last few days or in the last week, we have not seen much of the economic related updates steering the market, and it was more of the statements being keenly watched by the market participants on the trade and the geopolitics, which led to the movement in the financial markets. This week, we can expect some sort of stable markets, and the economic updates also taking some sort of importance out here, with NFP and FOMC coming in the next week. On the Indian or the domestic front, yes, we've seen good flows coming in. Rather, we can say we have almost 10 days of positive FII flows on the equity market front. But the border situation has, kept some sort of check in the price movements. We can say that, or as JK mentioned, a recovery in dollar index, a sharp recovery in dollar index, or escalation of geopolitical tensions can lead to USD INR moving higher. Otherwise, can expect a stable setup for the currency pair. And as we've been talking about, it's too early to talk about the reserve currency status, as no alternatives are available, and it looks like from the hard indicators that there's not much of a stress, although the leading indicators just suggest a decline in the growth. The recovery for dollar index can be seen in underway, and yields correcting after the threats of breaking of key levels can be the initial signs of this relative stability. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.